Good morning, everybody. Welcome into another live stream here with the Everyday Growth Advisors. I hope you are having a great morning. We have a ton of things to go through this morning, so I'm going to get right to it. Let's not waste no time. We have nothing that's really changed on the macro perspective, but we do have a lot of things that have changed on the technical perspective in terms of options flow, and also just positioning overall from market makers and dealers in the past two sessions. What we have seen in the past 2 days of trading has been some aggressive selling to create some space and liquidity for a possible squeeze to the upside. And I think that, there are obviously three scenarios that this could play out ahead of next week, which is going to be a huge week. And so let's go through all of the different scenarios to see where that can land us. Of course, I'm going to go through SPX because the NASDAQ's also going to kind of align in a way with SPX. So we'll go through what SPX is likely to do, and then from there we can also align with NASDAQ and the likelihood of where NASDAQ's to go along with it. So we'll look at both of the indices and kind of break it down so that you guys have a better understanding of where things are and where things can go. So in the past 1 to 2 days, we've seen pretty aggressive selling across the board. Of course, we mentioned that the 40.80 level to 41.20. So 41.20, 40.80 on SPX was a rejection zone. That was the previous rejection zone last week. And this week I moved up the rejection zone into 41.50 all the way to 4,200, which has been largely consistent with the positioning that we've been seeing in terms of options flow. Now, this is more of a upward squeeze level, which could be the end result of what we see ahead of CPI and FOMC next week. But there's a lot that has to happen to get us there. And I like to call this the double negative, or the double cross for market makers on both directions, because I think that the next 1 week that we're going to see is going to be very, very volatile. And we have parts of that already showing up in the VIX here, which is creeping up, right? So what is likely to happen here, and how are we supposed to play them? So let's look at, first of all, the bearish scenario. And I think this is obviously the scenario that everybody and their hamster, their alligator, and their grandma is thinking of, because retail traders are very, very priced in and looking into this possibility here for this trendline break. Everybody is focusing on this trendline break, and that's probably the most assumed move that is about to happen, where we break below this trend line at 39.05 or 3900 even, and start to make lower lows here, where we go back to retest and then ultimately fade into the 36.80 perhaps after FOMC. I think that's what everybody's expecting, that Powell shits the bed again. He comes out on the press conference, says something again, tells everybody that, hey, we're gonna do this and this and this, but remember that that's all largely going to be also after the CPI print comes out. So CPI print, whatever that it's going to come out as, is going to largely also dictate where the market's going to move. And so what we will possibly be able to tell ahead of CPI is, as long as CPI comes out as consensus, that means equal to consensus or less than consensus, that's likely to set up a huge short squeeze, okay? Because I think that a lot of retail traders or traders in general are going to get very bearish ahead of the FOMC and CPI print next week. Remember, CPI is on Tuesday, FOMC is on Wednesday. We have exactly 3 trading days before this happens. And so what I'm thinking is, if the bearish situation really does play out, that means we break the trend line, we come back for a retest of the 3950 or the 3900, and then the downside moves happens next week. That is the bearish play. How likely is this scenario? I would say it's less likely than the other 2 scenarios that I'm about to put out, okay? I think that there are too many people bearish right now, and everybody is thinking of taking the bearish trade or is already in the bearish trade. And they're likely to press the rally because they don't want to leave out any money on the table for this downside, which has got a very attractive risk to reward ratio, right? If you think about it just from the risk to reward ratio perspective, this is a beautiful risk to reward to the downside, not the upside, right? Not only that, we have that confluence with the multiple trendline rejection from this huge falling pattern that we've been having. And so that's going to add further fuel to the fire to traders thinking that this is a temporary local high, and then, that continued fall to the downside. So that's your bearish scenario played out. And I think that, if that happens, I would be quite surprised because it's very rare that the market gives you what you want. And I think that's a very unlikely scenario. I think that we might get that eventually, but not in the way that you think that we'll get it. So here's the other side of the coin that I'm proposing, or that I'm forecasting that might happen into next week, which might be a more likely scenario. Here, and it will have the same effect of eventually coming down, but we'll take a different path to get there. And I think that that path involves creating liquidity both up here and down here in order to trap some unsuspecting bears and some unsuspecting bulls in order for us to get that clear fall in panic. Okay, so what I do think is we will break this, we will come further down here, but I think that right when we come down here, I think that there will be a squeeze that's going to be kind of violent back up into the $4,000 level. Maybe not 4,000, maybe even higher. If it's not 4,000, it could be 408, or it could even be 412 on SPY, which is, these numbers are very similar. If you take the first 3 digits, they're maybe going to be $1 off, okay? So that might be a more likely scenario where we get a fake breakdown and then a squeeze to the upside, mainly because we want to get all this sweet liquidity that's down here where everybody is trying to take bearish positions. Now, once we do get that squeeze to the upside, I think it is very, very possible that CPI print comes out maybe as expected or lower than expected. That means cooler CPI numbers, and that might give us a violent squeeze. Okay, if that actually does happen, that's going to give us a violent squeeze, and the violent squeeze could really push us up into the target which I have set as of this past Sunday's newsletter, which is the possible rejection zone up into the 4,200, 4,150. Okay, and I think that this is where they really start to unload those positions and start taking the massive bearish positions ahead of FOMC. All right. And so this is what I'm thinking, and if that happens, then we should possibly really think of going short in this region here, because going short right here doesn't make sense from the risk to reward ratio perspective as well. It's really pretty tight. Okay, so that's the bullish scenario, but it ends with the bearish retracement after that. That would be following exactly the path that I've set out on the newsletter, which already right now it's already following that path, right? We were thinking that first little buy up, right, and then the pullback, which I explained to you guys, either to 4,000 or to 39.50, right, in Monday's live stream. And we did break below 39.50 and likely to see maybe another retest of 3900 or even a fake breakdown below that to get all this liquidity down here or stop people out, right? And then squeeze to the upside back up to maybe 4,000 or even 4,100 region here, which is back to this local high. Okay, once we get up there, then what CPI says and what Powell says during the meeting is going to dictate if we get up here or if we're going to sell back down. That's what I'm thinking is more of a likely scenario than the outright bearish scenario, because this would involve more complication. It would trap both sides, and that would free up a lot of liquidity for the actual move, which I think is more of a possible setup. Okay. Now, what is the third scenario? The third scenario is we trade flat. We trade flat. We just keep doing this and this and this and this until CPI comes out, and then we pick a direction either up or either down after CPI and after FOMC, and then that gives us the move after that. Okay, so the third scenario is probably also a possible scenario. I feel the third scenario is more likely than the first scenario, but not as likely as the second scenario. So the bullish then bearish scenario is more likely than the flat scenario, which is more likely than the bearish scenario outright. Okay, we're looking at just exposure here and all of those things. Okay, so that's your pretty much setup here. That's what I'm thinking. Obviously, remember, take what I'm saying with a grain of salt. This is just my forecast. This is purely for entertainment purpose. But you know, last week we played it pretty nicely. So you know, we're hoping for that fake breakdown. Just to summarize once again, fake breakdown, buy up, hit the 4,000 or higher, and then see how it plays out after CPI. If it gets a squeeze, we get that squeeze up to 4,200, 4,150, this region here, the possible rejection zone, and then ultimately sell off into the back end of next week, because next week is also OPEC's week. Remember that. So after CPI numbers and the Fed speaks on Wednesday, Thursday and Friday should be filled with a lot of players that are trying to either roll positions or hedge off their risk into the end of the year. All right. So you have to keep that at the back of your head. You have to keep all of these things in your rear view mirror just to make sure that you're on top of it, and keep that, you know, just loaded in your brain. Okay, great. Now, NASDAQ, if that plays out on NASDAQ, we're looking at a trap laid below here, right? right below here at 11,300, and then the squeeze up into the 11,620, which is the 38.2 retracement level, and then ultimately the squeeze back up into 12,100. If we really do get that extension, then 61.8 extension it is at 12,500, or if we really squeeze violently, then 12,781. That's the next one, which is the bullish pivot, the key bullish pivot for NASDAQ. Okay, so we're really far away from this so far. NASDAQ is still stuck in the middle, remember that? And that's you know, something that's very different, largely different with NASDAQ and SPX. So very different indices and doing very different things. You could see that yesterday we had that sell-off beyond the range right here, and then we got bought up into it. And today, pre-market, we're already trying to sell down into it. So as long as we can get this selling pressure, remember, what of everything that has happened yesterday, this selling that you saw, it wasn't panic selling, right? It was more of a controlled demolition to the downside. We saw a lot of controlled moves downside. The positions were getting let go. Look at the 15-minute chart. You can see it, right? It's, you know, a bunch of moves down and then a little pullback fade and then move down and pullback fade and move down again, right? And as we've been coming down here, the momentum, or rather the moves down, the move downs have been kind of fading. You can see that this move down was considerably less stronger than these momentums. And of course, avoiding this one, which was, this is a different one altogether. That was right after unemployment. And so what we're seeing is a little bit of a momentum that's slowing down, okay? We want to see that low momentum selling continue, and that's when the trap can be laid. Because remember, we want volume and momentum on the break here in order for this to be a real panic selling break. If we don't get that, then it's not really going to be a proper breakdown. All right, so that's what I have for you guys on the indices. Now, on top of that, look at the IWM. Okay, small and mid caps. They're almost at my target already now. These were, you know, what we were looking at when we were trading way above around here. And then we came down here, we squeezed, we rejected at that double top, and then we came way down here, break yesterday and the day before. And now we're looking like we want to go further down on IWM. But I think that it's not so easy for us to just hit down like that. We need to build some liquidity. Maybe have a pullback back up to the 61.8 level, maybe even the 181 level, have a couple of fake outs, maybe here or here, right? And then we can get down further here. If you guys also remember on SPX, I told you guys, we need to move sideways more to get to this trend line before we see any moves happen. And that's exactly what's happening right now. We're almost there now, right? So this is where we're getting close to that move happening, okay? So IWM is already kind of showing that it is looking for a move downward, but awaiting confirmation. Why do we need confirmation? Because if you start to chase this trade to the downside, when you have that impulsive wave to the down, you need to wait for the corrective wave to the upside, see where that demand and supply fall off, and see where that equilibrium is. Is it going to be somewhere here? Is it going to come back to a key level where we have a Fibonacci retracement level? And then see and wait for a rejection off that level to play the further downside. Okay, if not, what you'll have is a quick buy up back into the zone, and you'll end up with a fake out, right? So you got to always wait. Don't just play on IWM right here and take outright bearish plays right away. Give it some time to figure it out and let it confirm where the move is actually going to be. All right. And once again, guys, I really want to thank all of you for attending the stream and taking your time out to be here. Make sure that you smash the like button, click subscribe if you haven't yet. Truly appreciate you guys. And yeah, if you have questions, post them in the comments right now. Tickers you want me to do for you, go ahead, put them in the comments. I'll try to cover as much of them as possible. And I'm going to go through some of the other things that I'm looking at right now as well. Remember, the VIX is up here for 2 consecutive days now at almost up about 10%. So the VIX is starting to come back a little bit. Of course, remember, the VIX is not actually going to make any, well, it's not going to cause any mayhem until it gets above 23.89 or 26 or 29. These are the 3 levels in which we start to get into danger zone. And then above all of these is where you get into extreme danger zone. Okay. On the other hand, the bond market is signaling that the Fed is indeed going to pause its rate hike or slow it down at least. You can see that we're coming up onto the 108 level on TLT here. That means long-term bond holders are definitely looking at the possibility of you know, some appetite in the long-term bonds. Yields were really attractive down here. They started their bond buying spree. about a couple of days back. This was a huge buy right here. Also, now we'll be looking for that retest of the 109, 110 level on TLT for that pullback back into the 102, and then we should be able to play bonds into the first half of 2023, which is my plan anyway. All right. Dollar index, it bought up yesterday, and today, this morning, you can see that we are already selling off. This is going to relieve the pressure on equities to the downside, might cause a squeeze if you get below 104. If the dollar index comes below 104.60 and then continues to slide below 104 today, that's going to cause that squeeze on SPX to the upside. For those of you that are part of Discord, I already took that swing position on SPX yesterday on, where was it? Where did I put it? There we go. SPX calls, which we entered 4,000 calls as a starter position. Okay, so I'll be able to add more to it today if I see the confirmation, and if we get up to that level, then it would be nice. If not, then we'll continue to hold this position into the end of the day to see if we get the squeeze. Okay, and then on top of that, okay, so we have Tesla, CRM. I'll get to those in a second. If you guys have any other ones posted there, and I'll get to them in a second. Let's also look at some of the sector flow. Cyclicals are definitely one of the preferred sectors in this market right now. Semiconductors, I'm looking at possible building a upside position on this one for a longer term. I've mentioned semiconductors going back into a boom cycle in the past 4 weeks multiple times. I've also mentioned that consumer discretionary has been one of the weaker sectors, which is why Amazon and Tesla have been really taking a lot of beating. I will be looking at consumer discretionary, which is a cyclical sector, to come back into some strength in the next couple of weeks as well. So semiconductors and consumer discretionary will be two of the sectors that I'll be looking at. Outflows from the rest of the other sectors, which have been defensives, are going to start to go into these sectors if we do indeed get that bullish whip. And so these are two of the prominent sectors that I'll be looking at. If you don't know what are the stocks within that sector, go look it up. It's not that hard. Okay, Google that shit. You'll know exactly what are the sectors. You'll know exactly how to play them. Okay, semiconductors is considered a cyclical sector, just so you guys know. Also, just want to give you guys an update on the Tesla forecast. Remember, we posted a video about Tesla. I don't know when it was, but let me just go back to my YouTube channel and check. I think maybe... let's see. We posted a video on Tesla. When was it? Last 6 days. So exactly the last Wednesday, right? And I told you guys Tesla was going to sell off again. I don't know how many of you, followed it or took the advice that I gave you. It came down from the 200 where we were expecting that rejection, and we played it beautifully. Even yesterday I traded it. Nice little trades on Tesla and AMD, short positions. About $8,000 for the day. I took some L's on JP Morgan and XLF, finally coming back to break even, so I closed them out. So Tesla was a great one and continues to move further down here. Now, one thing I'll tell you is, don't get overly exuberant and bearish on Tesla here. All right, this is not the spot to play the wave down. Whoever who wanted to play the wave down, that opportunity is over. Don't try to chase this to the downside. The risk to reward ratio to the downside sucks right now, okay? And there is no guarantee that this gap is going to fill. So stop telling me that there's a gap that needs filling. If it fills, well and good. But let me tell you something. By you betting on this to the downside, you're putting yourself at a very big risk, especially since it gapped down. There's a very high chance that it will bounce before it even gets there, first of all, okay? In fact, what I do like here is the possibility of Tesla bounce to the upside, okay? So instead of now chasing Tesla to the downside, you should be looking at taking the counter trend trade here to possibly play the intraday squeeze on Tesla. All right, and that's what I will be looking for if I can get that momentum on my side and then get the flush on Nasdaq and SPX to go along with it. That will be a great trade to take intraday to the upside, and that's one of the opportunities that I'm looking at. All right, for today. Okay, now CRM. This one's been pretty tricky from a technical standpoint. Very technically traded so far, and obviously has a nice demand zone right here at around. We're pretty much in the demand zone right now, right? So CRM is in the demand zone, and it goes pretty deep down. You know what? It goes pretty much here. So We're looking at a demand zone that's pretty deep here with CRM. If you're looking at CRM, I highly recommend you not to touch this until you see a bounce in any of this space here. And since it is in the demand zone, I highly recommend you not to play this just yet. My way of looking at this would be either it squeezes very, very aggressively and shows that bulls are back in control, or it continues to move sideways here, or it continues to move down. There's only 3 ways it can move. And either one of these scenarios will need a confirmation. So right now, to try and speculate on this, it doesn't make sense because it's just gone through a violent earnings squeeze down. And then there was some rumors about the CEO leaving, or I don't know if he actually did. I think there was some news about that. So what you want to do is wait here, okay? Not take over exuberant position or try to bet to the upside just yet, all right? You're going to hold off, wait till you get more data, wait till you see what's interacting or how supply and demand is interacting here, and then you can make your move later, all right? Okay, is that all? Are those all the tickers that you guys want me to go through? Once again, thank you guys a lot for all the likes and for sharing the stream with your friends, family, whoever is here. Appreciate you taking the time out. Remember, it's all about consistency. These streams, they're here to help you. It's all about education. We're teaching you something that you can apply to your own trading style. And at the end of the day, you're going to fail a couple of times. Yes, we're not always going to get it right. But remember, at the end of the day, it's who you are, how you're going to deal with those tough situations. And trust me, guys, there are going to be days that I come on the stream and I'm going to be like, yep, I don't even know what the hell's going on. It's normal, okay? But right now, remember, there's a quote from my math professor, all right? He used to be from Foothill College in the Bay Area, and his name was Kirk Demlinger. Really nice guy. And he used to always say, luck favors the prepared. So if you are prepared, then be prepared to get lucky. If you're not prepared, then don't even look for luck. Because if you haven't put in the work, then you don't expect to get lucky, and that's just going to be something that you shouldn't deserve, all right? NVDA. Okay, I'll check out this last one, and then after that, I will sign up from the stream. Okay, so NVIDIA is also another opportunity that I'm looking at right now, and I spoke about semis already. So this is one of the players that are within the semis playbook. Pretty interesting kind of topping pattern, but a wedge pattern forming here. And if we can get a strong bounce off this trend line, which yesterday we kind of saw a little bit of a bounce, we'll see pretty much a bounce above 160, okay? I want to see this really start to come up above 160 and start making higher highs here, holding here above the 160 level with multiple 15-minute candles, showing us that demand is really clearly in here and not going to be sold off one more time, okay? The other scenario that can happen here with NVIDIA is we get the fake breakdown along with NASDAQ and SPY, and then it aggressively gets bought up along with the squeeze. So you have to be aware of both of those scenarios, all right? But either way, I like this to the upside. And when we do get that move, then I'm planning to probably take some 165 calls first, or maybe do some 160 calls depending on how I see the price action play out and the options chain, depending on how the open interest is, the implied volatility of the chain, look at some of the Greeks, and then I'll pick the right contract and go along with that. Remember, there's so much more in options trading than just playing simple out the money contracts. You don't just typically go one, strike out the money or something like that. There's a lot of, things that can be different. All right, guys. Well, I hope that stream was helpful for you guys. Once again, appreciate you guys being here. And I'll catch you guys on Friday. Remember, also another thing, Friday is PPI numbers, producers price index. So that's also going to give us an insight on where CPI is going to be. So yeah, this was a pretty loaded live stream. I hope that it wasn't too much for you guys. For those of you guys that found it too much, just replay the stream right after the stream ends and you can listen to it again. All right. Okay, I'm going to head off here and jump on the Discord with the team to trade live. I hope that you guys have a great trading session, great rest of your day, and good luck. I'll see you guys back on Friday for another pre-market breakdown. In the meantime, you have questions, comments, concerns, drop a comment on the video, message me on Instagram. I'm available in so many ways to help you guys out, all right? Always in your corner, and I'll always help whenever I can. Take care, and I'll see you guys. Bye-bye.